Welcome to Thematics at Goldman Sachs. I'm Tom Lydon with ETF Trends. And in this series, we're going to dive into actively managed funds and how they fit in client portfolios. On this specific episode, I'm pleased to welcome Kristin Kuney, who's Managing Director and Head of Liquid Real Assets at Goldman Sachs Asset Management. Kristin, welcome. It's great seeing you.
Thanks, Tom. Thanks for having me.
Kristin, you manage the GS Future Real Estate and Infrastructure Equity ETF, GREI. Tell us a little bit about that strategy.
Sure. I know it's a mouthful to actually pronounce, but we think about GREI being an integrated solution which offers investors exposure to real estate and infrastructure assets, which enable a society and economic to function. So think about these assets being relatively stable in demand, predictable cash flows, which offer also a nice dividend yield for investors over time.
So
And
in real estate, there are a lot of different areas. So walk us through some of the main, let's say, sectors in the real estate market that you're really focused in on.
Sure. We look thinking about it, Tom, is the future of real estate being those exposed to secular growth trends. So we think about innovation, think about data, transportation, and storage, our cell phones being one example of our opportunity set. Innovation in terms of both the energy transition and where we're going to a cleaner future. So again, those utilities are enabling that future, as well as renewable developers. Demographic shifts, aging population, which needs more healthcare infrastructure over time, as well as affordable housing, and social sustainability. So again, similar to what I just mentioned in terms of demographic shifts, housing needs across the country and really globally are for affordable housing are in short supply, and we need the real estate companies that we invest in, infrastructure companies also, are able to provide that housing around the world for individuals.
So I heard a couple of things. First of all, cellular. So 5G build out, that's a part of this?
Correct. So you think about the carriers in the US and globally having to build out their 5G networks. So they need to continue to invest in their networks, and that is increasing demand for cell tower space.
And the growing population in Asian countries, there's a way to actually profit from that as well?
Correct. So American Tower is one of our favorite names to play this space, has emerging market exposure. And if you think about emerging markets, a lot of those countries don't even have wireline. So they're building out the first generation wireless networks for, again, connectivity across that region and country.
So this is a global portfolio. Talk a little bit about access to global real estate companies, and are they companies that you can trust? Are they maintaining the proper accounting standards? It sounds like you've actually got some emerging market allocation in there as well.
Correct. I would say in general, our emerging market exposure is about 5% or so. So as you mentioned, we have to be very careful in those markets. A lot of our investments are regulated and are driven by certain policies. So think about the utility sector. So we have to have a good on the ground sense of those regulations. And again, the governments are in a lot of ways controlling a number of these assets. So we have to have that confidence that our interests are also in the best interests of the government.
You folks talk to thousands of advisors over the course of the year. I know this has attracted some interest. Where are advisors allocating money to this? Like, where's that money coming from? I know we're seeing a lot of advisors maybe downplay that 40 and the 60-40 allocation as they're concerned about income. They tend to be a little bit top heavy in U.S. stocks.
Sure.
Anything else that you would point out where they're finding availability to be able to take advantage of the sector?
Sure. As I mentioned in the beginning, I think that this sector provides a good diversification, both against broader equities and a fixed income alternative. In a yield starved environment, this offers a yield about 2.5%. And a growing yield. So we do believe that over time that this yield will be relatively attractive. And we do believe there's a why now story on the asset class. Again, as for everything we've seen in inflation, this asset class is actually a beneficiary of rising inflation, both from a cash flow perspective as well as an incumbent value perspective. Rising material costs inherently limits new supply, which increases the value of incumbent assets. So again, as we look across the world and inflation has spiked, this has actually helped our companies in terms of cash flow, which will, again, go into dividend growth over time.
So diversification outside the U.S., alternative for income, and also a hedge against inflation that doesn't seem to be subsiding anytime soon?
Correct.
Great. Well, Kristin, hey, thanks for the time today. Really appreciate it, and continued success in everything that you folks are doing.
Thank you so much, Tom. Great to be here.